Okay, I want to talk to you about the process I go through of picking the stocks that I want to own. The first part, as I've said before, is I want companies who are going to change the way that I'm going to live. And that is how I pretty much focused on the big nine. And go into the direction or the description of the book or the video, and you're going to see a link to the big nine. And those are the companies I concentrate on. From there, I then want to know that they have a good book. They have a good balance sheet. They're profitable. They aren't burdened with debt, so that when something like this virus deal happens, they could get in jeopardy. So I don't want to, I look at their books. I understand how they make money. I understand how they're going to change my life in the future. And I understand that they have good management and sound principles. From that point then, I want to buy them within a trading range. All stocks kind of trade within a range so that, and you can chart it. And I'm going to take you to the charts and I'm going to show you how I do that. Okay, again, this is TradingView.com. I use the free part of it, and you'll see it'll every once in a while throw an ad in front of me. And so let's start. And over here you can create a list, a wish list of, or a list of stocks that you follow. And you merely put the symbol up here, and then they come up. Let's look right now at the Dow Jones Industrials. As you can see, it's up 499 points right now. What I've done, what I do, is I create, as I said, a trading range. What you see here is the trading range for the Dow. The red line, the heavy red line, is the 200 moving day average, which certainly is a trend. And as you can see, it moves up here. Then what I do is I create trend lines and say, okay, it's trading within this range. This is probably too big of a range, and you can move this to create a following. And the Dow is probably not the best of to look at because it's only 30 stocks. When it gets outside the trend line, it's certainly overbought. When it gets outside the lower trend line, it's oversold. And so here you can see the Dow dropped, and I don't think anybody'd argue that it was oversold. And this is where it is right now. But let's look at some of the individual stocks that I happen to like. This is Google. And here you can see I've done a tighter trend line. We're going back to 2015, and that's when Google kind of changed their name to Alphabet. And you can see you could just look at the 200-day moving average and say that's a trend line in itself. And as you can see, when it gets above the trend line, you usually see a correction. Above the trend line, you see a correction. Below the trend line, you see a correction. It got above the trend line, and now this is where it's at. I looked at this this morning, and I thought, I think my target price on Google is $996, which would be down about here. Well, there it is. It's on that green line, 990. And it's close. It's at 1092. I would say that Google, if we can get another good down day, Google is a buy. Okay? Let's then look at Amazon. Sorry about that. I used the word Google and it answered me. This is Amazon, And as you can see, where Amazon is right now at 1893 is well within its trading range. And in fact, it's right at its 200-day moving average. This is not a buy. It probably was a buy at when it got down to 1634. This is Microsoft. Again, trading well within its trading range. Now, how do you get this trading range? Well, basically, you go over here and you see that little bar with the two dots, and you click on that, and it says trend line. And you click on that, and now my cursor will give me a circle, and then I can draw a trend line. Okay? So that's how you do that. You can do a lot of things with this. So, again, Microsoft isn't appealing to me right now. In fact, as you can see, this is where I wanted to buy it, down around 122, and it never got there. Apple is just came into its trading trend line. Now, Apple is, interestingly enough, in my mind, it is now a trading stock. It is not an investing stock. This is a stock that if we get a good drop in the down day, I might buy it and then plan on selling it the next day. Because again, it at its low point, it was still within its trading range. Now, I did a video about the manipulation of the market. It was that interview with Kamish or something like that. And he explained what this was all about. This was about Apple buying their shares and driving the price up. And then the hedge funds jumping on the bandwagon, seeing what they were doing. And why did they buy their shares? Again, Tim Cook's salary is dependent upon one of the areas is the growth of the earnings per share. Well, if we look over here, we can find how many shares they have out, if I can find it there. Number of employees, number of shareholders, price of equity. If they buy shares back, then the divisor into their earnings, let's say they have $1,000 of earnings and they have 1,000 shares. Well, their earnings per share is then $1 per share. Well, if they buy back half of those 1,000 shares and now they still have 1,000 shares, or they still have $1,000 of earnings, but now the divisor is 500, they now have $2 per share. So Tim Cook gets a bonus. All the executives get a bonus. And that's what they did here. So Apple is just coming back into its trading range, still way ahead of its 200-day moving average. Somebody asked me, let's look at Facebook for a second. Facebook, actually, this is an interesting one. It was in its trading range, and this is when Mark Zuckerberg got called before Congress and had to explain himself. And you see the tremendous drop. Well, at that point, to my way of thinking, Facebook established a new trading range, and that's down here. Facebook is outside that trading range right now. Facebook is, again, we get a downturn. It's actually down $5 today, down 3% today. This is a buy. Then this is an interesting one. Somebody in their comments asked me about IBM. And this, quite honestly, if you look at IBM here, this is why I wasn't too excited about it. Going back to 2012, 5 years, 6 years, 5 years, IBM's on a downturn. IBM lost its identity. That's what I would tell you. What is IBM? It's a big computer company. It feeds the needs of big corporations. And that, I don't think, was of tremendous need. It had Watson. But on the other hand, the guy who needed the big computing capability was Jeff Bezos, and he has his own Amazon Web Services. So IBM lost its identity. But now we've gotten into quantum computing, and 5G is going to create a tremendous demand on computer power. And I'm believing now IBM is going to become a relevant player. And look at this. Even this is its moving average, but look where it's selling right now. And look where it got to. It got down to about $95 a share. Gets back down there, I'm a buyer. Let me show you another reason I'm a buyer. Dividend yield of 6%. You don't find that anywhere in this size of a company, and this is one of the big nine. So whoever it was who asked me why I wasn't considering IBM, you brought value to the tribe. You got me looking at this. And again, then let's look at their book. Free cash flow, $12 billion. They're not in jeopardy. What's their debt? Their net debt is $59 billion. Their total assets are $152 billion. So they're in a strong position. Now, why are they carrying debt? Because interest rates are down around, they're probably paying 3% on that debt. So if they can invest, if they can borrow at 3% and their return on equity is 5%, that makes sense. So if I can borrow money at 3% and invest it in my company and get a return on 2%, I've got a net gain of 3 from 5 of 2% there. So I would borrow all day long as my cash flow is enough to service my debt. So I'm liking the looks of IBM. Again, at 106, I think I didn't have a target price on IBM. Being greedy, I'm going to look for a downturn in the market, and I'm going to try to buy it for somewhere under 100. But that happens, and then I'm a long-time holder because it's paying me a 6% dividend. So that's kind of how I look at them. Then let's just look at some of your favorites. This is Tesla. Oh my God, it's right at the 200-day moving average, but that 200-day moving average is distorted by this. Now I want you to see this. PE ratio, 0, because it has no earnings. Free cash flow, it has $973 million of free cash flow, but it has, that's an M. It has $14.6 billion worth of debt. And then I come back to what is Tesla? Tesla is a luxury automobile that is an electric automobile, and certainly it's a car of the future. But I look at Tesla and say it's a testing ground for electric luxury automobiles, and once they master it and get the price of the batteries down, I'll guarantee you Mercedes, BMW are going to slip a battery in and basically have the control of the market. VW, Volkswagen, is the largest manufacturer of automobiles. I'll guarantee, and I think they've just recently put one in Porsche because Elon Musk threw a disparaging remark towards Bill Gates because Bill Gates bought a Porsche electric car rather than a Tesla. So I wouldn't touch this with a 10-foot pole. This is another company that I just believe, like Uber and Lyft, as soon as Amazon wants in that business, it's just an app. Do they have any form of loyalty by their employees? And when I'm speaking of their employees, their drivers, no, there's no loyalty there. So I think it's a temporary. They're temporary players. I think Tesla will probably survive, but it's going to be a Rolls Royce. It's going to be a Lamborghini of luxury automobiles. It's never going to be a big player because the big players will basically put them out of business. Then a couple of weeks ago, I did a feature on this is Sun Communities and equity lifestyle properties. These are two trailer park companies. And if you follow my videos, you know I got a trailer park for sale, and I've learned a lot about the business. And look where they're at. This is their trading zone, if you will. And they got out of it. They just boomed. But now they're down below it. And they got all, this is equity partners. And then let's look at the other one, Sun Communities. I'm liking. Why did they get down so far? Because they're a REIT, a real estate investment trust. And they fell way out of favor as a result of the market crash. Because, again, most REITs are based on heavy mortgages. And let's look at the books on, and it pays a 2.7% dividend as well. That with IBM, and you've got some monthly income, or quarterly anyway. Free cash flow of $192 million. Total debt, 2.4. Total assets. So their debt to equity ratio is somewhere around 50%. Return on assets about 6%. Return on equity about 23%. That's pretty stout. So this is another one that I'm probably going to add to my list. Because again, I've learned about trailer homes that they're appealing to the lack of affordable housing. They're a wonderful alternative for baby boomers who can't afford to go to these big retirement homes in Orlando. But if they're comfortable in a trailer, they've got most of the amenities of these retirement communities. So this is a viable consideration. Okay, so we now know that we want companies that are going to change the way we live. We want them to have a good balance sheet and that they can endure bad times. And then we want to find them in their trading range and recognize that sometimes they're going to get out of their trading range for whatever reasons, like we saw on Apple, and we'll want to get out of them. And then let them come back into the trading range and maybe even fall below the trading range and give us an opportunity to buy back into them. So we're investors, but we recognize what's happening, and therefore we do a little bit of trading. The other thing that I think is real important is that you set up Google Alerts. The Google Alerts will help you become aware of what's happening with the stocks that you own, and thus you can react accordingly. We've got to remember that this is not a hobby. This is a way that we're going to supplement our income or make all of our income. So we have to take it as a professional, and that means we read about it, we study it, we learn how to do things, and we gain knowledge from other people.